I'm going to present the recommendations of a group of three of us, myself, Jan-Peter Cranen, and Helene Ray. So what went wrong in the crisis? I think one of the main problems was that the basic idea underlying financial regulation at that time was that if you a build-up of risk in individual financial institutions, you'll prevent a financial crisis. That's an important component of any regulatory system, but it's not sufficient. What it does is ignore systemic risk. Now, systemic risk is a complex phenomenon, but basically it comes from the interactions of financial institutions. One example is contagion. So if one fails, then if others have a claim on it, then they may also fail, and we get a domino effect, just as one example. Now, great progress has been made in improving the regulation of the financial system. Things like capital standards and so on have been significantly improved. But there remains a significant amount to be done as well. And what we aim to do in this recommendation that we have is to have doable and concrete proposals that will further improve things. Our proposal to improve financial resilience has three components, three practical ways to improve resilience. The first is to remove inconsistency and incompatibility across regulatory measures. So just to take one simple example, the way that subordinate bank bonds are treated in banks and insurance companies differs. And that tends to undermine some of the proposals that have been introduced. So in banking regulation, government guarantees, implicit guarantees of subordinate debt have effectively been removed. It's now bail-inable in many countries. Now, what that means is that if the bank gets into trouble, this debt will turn into equity and its value will fall. That's what bail-inable means. Now, the question is, who should be holding this? If it's held by retail investors, you have a problem because they'll put pressure on the government to bail them out and remove this bail-inable feature. And we saw aspects of that in Italy in 2015. Now, ideally, it should be institutions with long-term horizons that hold this kind of debt. Now, one good example of that is life insurance companies, which have very long horizons typically. Now, the problem is that regulation in insurance industry such as Solvency II, tends to discourage the holding of those kinds of bonds by making it more expensive in various ways. So one of the things that we need to do is to coordinate the different types of regulation of banking, insurance, and other parts of the financial system. What we would propose is that we have an expert committee that looks at these incomparable and inconsistent aspects of the different kinds of financial regulation and makes recommendations. And they can then be implemented. Now, second aspect of our recommendations is to discourage the use of financial regulatory standards as a means of international competition. One of the problems in recent years has been the rise of anti-globalization politicians who have as part of their agenda to put their country first. Now, one of the things that the 2008 G20 meeting did was to try and overcome those kinds of regulatory problems that create incentives to race to the bottom, to undermine your regulatory standards to attract business, while hoping that most of the costs of that fall on other countries. Now, one example is central clearing houses. Those at the moment are typically nationally regulated, and that creates incentives for this race to the bottom. We would propose that another expert panel look at how to create impartiality and have broad implementation of supervisory tasks which prevent that kind of race to the bottom. And the third proposal is to give weight to explaining and rationalizing the established regulatory standards. If politicians are to be prevented from trying to pursue national interest rather than global interests, then what we need is the electorates to understand what needs to be done. And we recommend that there be further improvements in financial literacy, in particular to try and make people understand why good financial regulation is an important component of a financial system. And we would suggest that that be introduced in various stages in the educational system, hopefully in the secondary system so that everybody gets exposed, but also in the university system. These proposals don't solve all remaining problems, but as I say, we hope that they are doable and concrete, and we believe they would help significantly to improve financial resilience.
Thank you very much, Mr. Allen. Thank you.